Welcome back. Hope you're having a good morning. Well, the bulls will be feeling good. You know, when you have the SGX 50, they're suggesting a 100-point downtick and 15 minutes into the trading session. Well, you're sitting with the cut off only around 30 points. It's a good start, but let's see how this one ends. But let's invite our next management as promised. IGL's Q3 earnings, well, they were largely in line. But there were many tailwinds for the company in terms of gas pricing ahead. The company's margin saw a decline on a sequential basis, with both the volumes and the EBITDA per SCM were absolutely in line. Mr. Sanjay Kumar, the MD of IGL, joins us to discuss more on the way ahead from here on. Hi, Mr. Kumar. Thanks so much for joining in. Well, earlier you had guided that volumes this year will be around 9 SCMD. And EBITDA per SCM for the past quarter was around 5.7. So tell us first on volumes, will you hit that 9 SCMD mark? And where does the EBITDA per unit move from here? Go ahead, sir.
So thank you for having me here. The EBITDA for this year, for this year we had projected to be around 7 rupees per SCM, and for the next year we are projecting about 8 rupees per SCM. The volume this year we had projected at about 8 million cubic meter per day, which we should get by the year end in next one month. And for the next year we are aiming volume of about 9 million cubic meter per day for the next financial year. That is what we had projected earlier also.
Okay. All right. So you're maintaining that, right? 9 million is volume and 8 rupees is the pricing.
Yes.
Okay. Okay. Got that. Could you tell us what is the current gas sourcing situation? Split? How is the split now between imports and domestically allocated gas?
So we are selling in CNG and PNG. We are selling about 7 million cubic meter per day. Out of that, 6 million comes from APM, non-APM pool, and remaining comes from the market sources. That is from our long-term LNG contracts, RLNG contracts, and the market that we buy from exchange or from other spot contracts that we are buying. Effectively, the tailwind that you are referring to is about the pricing. So the pricing that we are on the cost side, we are paying is about 49 rupees or 50 rupees approximately per SCM, which is very high. And accordingly, the impact is there in the quarterly profitability numbers. We have always maintained the policy of keeping the volume intact. The volume growth should be there so that the conversions continue, and we would let the market be there rather than look at the short-term profitability.
But can you lower the sort of sourcing cost while you keep volumes high? I mean, is there any way you can do that?
Yeah. So, as per the policy of the company, we have not been maintaining very high prices of CNG. If you compare the price of CNG of IGL, it is always, lower than the average, the median pricing done by other CGD entities. And there is a good development, and you may be aware about this, that the Kirit Parikh committee report is already submitted and is in processing for approval by government. And the moment that comes into effect, it would help us with better margin, and we would be able to get, even more profitability than the last quarter that we had.
Okay, all right. Well, Mr. Kumar, will you now look at increasing prices? Between your peers, I think you were the only one who did not increase price despite the hike in pan gas prices. So will you be looking now to push through prices? And how is demand?
So the demand is growing. We are selling about 8.2, 8.3 million cubic. That's our overall sale. It includes industrial, commercial, and other sale also, in addition to CNG and PNG that we are supplying to our GAs. So the price increase is not on our radar as of now, because we are at prices which is very near to the diesel price, and we would not like to lose the market. If we increase the price any further, it would hit our market. The conversion rate of vehicles which we have seen in January going up, it has increased in January. This must be the only company where the vehicle buying of CNG vehicle as well as conversion of vehicle has improved in the month of January.
Right. Could you, you mentioned that Kirit Parikh, it's the report which is awaiting approval. Any sense on by when should that get the go-ahead? Any feedback you've gotten?
No, I don't have any feedback, but these proposals take typically, many weeks for approval. It should be, implemented shortly. That is our hope, and that is the sense that we have from the industry players who were a part of that committee.
Okay, all right. Mr. Kumar, we are located here in Maharashtra, so we would like to know whether you look at acquiring smaller CGD companies, either in Maharashtra, either in Karnataka. Anything finalized out there? And will pan-India expansion be your plan now to increase volumes?
See, this business of CGD is actually slightly different, and if there is an opportunity, we would always look at it. We evaluate all the opportunities, what kind of pricing we attach to it is very important. So we would not
Are
like
you
to
evaluating,
compromise.
Mr. Kumar, are you evaluating any such opportunity as of now?
See, these are, strategic discussions that are held in the company, and I would like to pass this question.
Okay, all right. Sir, good morning. This is Sonia here. I just have one question. The government has capped these HPHT gas marketing margins for traders, which is a type of a gas source. Can you tell us what is your percentage of sourcing from HPHT? What has the price level been capped to, and what would the impact be?
We don't have any direct contract as of now of HTHP gas, but we buy a lot of gas from exchange, and some of it may be HTHP. The circular that particularly of the circular of Government of India that you are referring to actually has one provision which says that CGD entities would have first priority in getting that gas whenever it is being sold at the ceiling price. So that will help all the CGD entities, wherever there is a shortfall, because you may be aware APM non-APM gas is limited quantity, but the market would grow in coming years because of these 550 districts which are going to be connected with CGD entities with gas pipeline. We expect the consumption of CNG and PNG to improve, and to improve multifold. And that is where the sourcing of gas from HTHP would come into the play. And this is where the government support is very valuable for CGD entities, because most of the GAs are in evolution phase. They are in nascent phase, and they would like that kind of support. That's a very good move by Government of India, wherein CGD entities would have first priority in HTHP gas. Having said so, the price of HTHP ceiling presently is more than $12, and that will create challenges when we are trying to service the customers, because of the ultimate limit of alternate fuel, which is diesel, petrol, and LPG that we have in our market.
All right, so we leave it at that. Thanks a lot for joining in, and all the best for the future. That's the word coming in from IGL. The market, by the way, is very quiet. It's actually cut its losses from morning, so now it's moving into flat terrain, but it's facing a bit of resistance at this 18,000 level. As you can see, the dips have gotten bought, and all three indices are now, just about making their attempt to head into the green line. So in that context, it's a good day so far if you've bought the dip. Mitesh Thakkar joins in. Mitesh, what is your sense? You think that, this buy on dip situation is something that could continue through the day? And what's the prognosis in terms of individual stocks?
I think that's a fair possibility. I talked about the fact that 17,950 is the immediate support, and we managed to dip below that, but immediately bounced back and recaptured that. So I think that's a good setup. 18,150 still remains a formidable level to cross. That was also the budget day high. But I think there's a good chance that we'll at least reattempt that in the next 1 or 2 or 3 sessions at the most. So in that sense, we are still maintaining our long bias. The stock calls also actually are on the long side. I have a buy on Ultratech Cement, which is having a good price and volume action day. So that's a buy with the stock below 72.50. Look at targets of around 7,500 over here. And the other one is Steel Authority of India Limited, same. That's a buy with a stop just below levels of 85 for targets of around 91.
You know, let's just have Polycab up. These are additional names which are popping up on the screen. Polycab is up about 2.5%, 31.23, coming up with lots of volumes. We've got Dalmia Bharat, which is now popped up a little bit more, 2.25 there. I mentioned Prince Pipes earlier. There was a block as well. PNB Housing I mentioned earlier. Look at Zentech. You know, it's up 6.5%, and I'm only mentioning this because it's got that ZENTEC. That's you know, 245, and large, very large volumes, by the way, on Zentech. Mirza International has got large volumes. I think I did mention this. It's coming up with decent kind of pop. Supriya Life Sciences, if you can have it up, it's up 9%. And again, it's got decent sized volumes. So it's coming up on the screen. It's, of course, I think done poorly since listing, right? And that is something which one should pay attention to. On the downside, look at Ipca Laboratories. That is the one with which is selling off on volumes. It's down 4% at about 830. So lots of stuff moving around, even as the broader market is, even as the market is picked up from the lows of the day. Mitesh, thanks very much for that. Good to get that perspective. Sorry, you want to make a point?
Okay, no, actually, I was just, pointing out that there's a lot of recovery in the Adani Group stocks, as we were mentioning earlier. So making a big comeback, right? Whether it's Adani Power, Adani Wilmar, Adani Green, all moving up now. So, well, I mean, some of them are still, it's still very volatile, but from the lows that we saw about 10 days ago, a lot of these stocks have made a good recovery. Well, Mishra Dhatu Nigam, or Midhani as it's called, signed 11 MOUs with various organizations such as Hindustan Aeronautics, Hindustan Shipyard during the Aero India 2023 under the administration of the Ministry of Defence. Midhani has signed MOUs to expand in aerospace and naval materials, R&D, exports, healthcare and training. We don't have too many numbers, so let's try and get to the bottom of it. S.K. Jha, who's the chairman and MD of Midhani, and Harshit Kapadia of Elara Capital, who tracks the space closely, joins us now. Mr. Jha, if you could just start by telling us, of course, the whole plan looks quite ambitious in terms of the several MOUs signed, but can you quantify for us what the value is of these MOUs and by when will they get converted into orders?
Yeah. If you see the total mix of MOU,
And fix that in a bit. I think there's some, echo that's coming through. In the meantime, let me get Harshit Kapadia as well. Harshit, your thoughts, from the listed entities that you track, which ones could benefit the most?
So among the listed space, if you look at the biggest announcement which came is there has been a 75% allocation for domestic procurement for FY24 out of the defense capital budget. So the amount close to around 1 lakh crore. And that is going to be benefit to defense PSUs and private sector within the defense name. So whole host of companies from Hindustan Aeronautics, so Mishra Dhatu Nigam Limited, Bharat Dynamics, Bharat Electronics, and on the private side, Data Patterns, Extra Microwave, Dynamic Technologies, Zen Technologies are some of the names where these companies are having some engagement with the public sector as well.
Okay, I think Mr. Jha of Midhani is ready with us and think the issue's been fixed. Mr. Jha, good to have you with us here. Good morning again. Could you sort of quantify the value of the MOUs signed and what is the nature of these MOUs? Is this just a broad understanding to work towards signing an order at some point, or these are orders themselves? These are firm orders themselves. Go on.
MOU is not a orders, but MOU is basically some sort of a guideline where both the organizations where the MOU is being signed will work together. So if you see the combination of MOUs, we have MOU with the HAL. Basically, that is where we are working towards the aerospace materials. So in aerospace, you might have seen in this particular Aero India 2023, a lot of announcements were made from the different like OEMs coming from the foreign countries, from the India side, HAL, and so many other private industries they have announced.
Mr. Jha, so for your company, could you tell us the scope of work for which these MOUs were signed? I mean, value?
So what we are, with this MOU, we are going to develop the aerospace materials for different platforms. So coming to that total values, what we see, it will be around 500 to 600 crores conversion of business will be there in as far as the aerospace industry is concerned.
So
So in
500 to 700 crores worth of orders you expect basis the MOUs you've signed at this Aero India event.
Correct.
Okay. Sorry, go on. You were completing that point. Yeah.
Yeah, and then in addition to that, we have also signed MOU with the academic institutes like IITs, that two IITs, Mumbai, Bombay, and Roorkee. And in addition to that, we are also have one MOU with a startup, which is basically we are trying to work in the healthcare industry. So we have developed a alloys which finds application in the health care industry. So there is another very important achievement for this MOU. But there are many others for Hindustan Shipyard, for the naval, because Midhani is not working only for the aerospace. We have a diversified amount of working where we have for aerospace, we have for defense, other industry like naval. So that type of portfolio is there. So in that context, the MOUs which we have signed is very important.
Okay. All right, Dr. Jha, let's get a couple of numbers going then. Last take, your order book was around 1,500 crores, 1,470 crores odd. What is the updated number? And split it up for us between defense, space.
Yeah, we have order book position is as on today also around 1,400 plus.
Okay.
And we have almost now 60% is from the space and 40% around from the defense.
Okay, all right. 60% from space, 40% from defense. Got that. You know, when you joined us the last time around, you were guiding for revenue growth of close to around 20% in FY23, with margins in that vicinity of around 28 to around 30%. I'm looking at your 9-month performance, you're more or less flattish. So are you going to have a blockbuster Q4, which normally is? It's the heaviest part of your all of your financial year. So will Q4 be really good? And what do you end this year in terms of revenues as well as margins?
Yeah, but it is a fact that Midhani at Q4 will be always on the higher side, because many of our products are having long gestation period. It is a lot of time to convert from the starting to the finished product. So it will come at the end of the quarter only, it will convert into the business revenue. So that's what you might have seen, that our inventory level also is very high, the work in progress.
No, so, Dr. Jha, what I'm trying to understand is that 20% growth for the year, is it achievable still? It looks pretty much, I mean, at the 9-month mark, there is no growth. So will you grow by 20% for FY23? Do you stick to that guidance? Revenues will be higher by close to around 20%?
We are targeting that. We are targeting to that level. Let's see that how much we come to that, what level we can achieve. But we are targeting to that level.
So what are you targeting? I mean, 9 months FY23, your sales are about 527 crores. What will you end the year with?
It's coming around 1,000 crores will be our figure. So we are trying to go to that, where we can go to the 1,000 crores of turnover. Because whatever we have installed, the new facilities like our white plate, that there I am expecting in this quarter contribution will be there from their side, that side.
Okay.
And
so
also
1,000 crores is on the top line, and on the margins, do you think you can end in that 28 to 30% band?
More or less, so far you might have seen that we have come to our operating profit is in that range only.
Yes.
So I to that level, but only on the PAT and all, there will be some pressure because of the finance cost is going up and other aspects are there. So our operating profit margin will be in that range only.
Any plans on exports? I mean, if you can tell us what is the export percentage right now, how much will exports grow from here, and what is the contribution to your order book?
Export this year, we got reasonably good export value, but only thing is that again, export also is converting into the orders in this quarter only. So you'll find that with the last year of around 87 crores, will be much growth will not be there. It will be almost running in that region only, because initial first 2 quarters we didn't get any export because of the global. So basically it is coming in the Q3, Q4 only. So we are trying to the target which due to last year, but I think it will be less. The export will not be the level which we have achieved.
All right. You know, Dr. Jha, going by what you're saying, in Q4, you'll have to do revenues of more than 400 crores. So there'll be a whopping 25-30% growth on the base of last year to get that 1,000 crore mark. Very quickly, if you could tell us, is there an OFS in the works? Last time around, you were indicating that maybe there's a potential OFS on the company in this year. We've just got a month or so to go. Is it still on the cards?
As per our understanding, it's still in the card, but it has to be taken care by a different ministry. So they are, I think, they are working on based on their priorities. But it is already well there in the card. It is there.
We'll have to wait by then to hear further details on that front. Thanks so much, Harshit, as well as Dr. Jha, for stopping by and giving us those details. The big takeaway is that Q4 will be blockbuster for Adani. They'll be ending the year with close to around 1,000 crores of revenues, margins in the band of around 28 to 30%, and watch out for a potential OFS yet again. So we'll keep an eye out on that. For the time being, slip into a short break. You come back. Manisha Gupta will be joining in to tell us what's going on in the commodity space.
Welcome back. Let's get you a quick update on what's happening in the world of commodities now. Manisha Gupta is joining in. Manisha, what are you looking at today?
Sonia, I'm looking at metals as a sector, and I'll start with the gainers here. And within the pack, copper clearly stands tall here. We've seen nearly 2.5% of gains for the week. And the intraday markets, this one also is trading on the weaker side. But on a week-on-week basis, copper is the only non-ferrous metal which actually is closing in the positive here. The reasons being that you are looking at China flagging more stimulus measures to push the growth going forward. So the markets are anticipating that something could come in this month itself and for the quarter, and that has been supportive. And then you have wage negotiations, dispute between Panama government and the copper miners, and there are some supply concerns coming in from there. But not just copper, the ferrous metals also are doing quite positive. So 2% up for steel and 1% up for the iron ore prices for this week is how we are trading. But barring this, every other non-ferrous metal and precious metal is headed for a decline in this week. We have seen strong US data come into the markets. So whether it has been about the producer prices, inflation numbers for the month of January, or the weekly jobless claim numbers, all of that do indicate that the hawkish stance that the US Fed has been keeping on could just about continue, and we could be looking at higher interest rates for the month of March, June, and going forward as well. The strength in US dollar and treasury yields is yet another thing that's weighing on in many of these metal prices here. So when you look at on a week-on-week basis, we have seen declines continuing. You have gold, which is trading at a 1-month lows. Silver prices trading at around 3-month lows there. Platinum is trading at 3.5-month lows. You have palladium prices trading at 3.5-year lows as well. So that's how many of these precious metal prices are doing. The chart should come in on your screen on what we've done on a weekly basis right now. So gold is down 2%, silver 2.5%, platinum 4% down. And within the non-ferrous space, we've seen tin prices decline quite sharply. You have nickel prices, which are down by nearly 9% as well in the previous week itself. Tin is down, zinc, aluminum also down 3% per piece in this week. So yet another week, a third week actually, when we are looking at declines continuing for the metal space.
Thanks a lot for that, Manisha. Well, IPCA Labs is down almost 4% right now. If you're wondering why, Ekta is here to give us the fine print. Ekta, over to you.
Thanks for that. Well, you know, IPCA Labs came out with their numbers last week, which was basically on Thursday during market hours. But they held their conference call last evening, which was on the 16th of Feb. Post-market. So what the stock is doing is actually reacting to the conference call takeaways as well as the brokerage updates. Now, in terms of the numbers, just a quick recap, the revenue was up around 8%, so it wasn't really a problem in terms of revenue, but the EBITDA was down 30% year-on-year, margins came in at 14%, and a profit of around 108 crores. Also, Q-on-Q margins were 14% versus 16%. Brokerages have written on IPCA. Macquarie, which has an underperformed rating and a target price of 810, has said that the company did miss their EBITDA as well as profit estimates. And Q4 FY24 margins could actually remain softer than Q3. And remember that 14% margin was one of the biggest disappointments for IPCA this quarter. FY24, the EBITDA margin guidance is 21%. So that would probably be a tall order to achieve as well. Macquarie has lowered the FY23 EPS estimate by 25% and 25% 25 by 9% and 7% respectively. Motilal has a buy and a target price of 990. According to them, the operating deleverage has played a spoil sport. Sales growth is revival is imperative for the stock for profitability improvement. So there is some amount of caution when it comes to the operating margins for IPCA.
All right, Ekta, thanks very much. That's IPCA, which is lower. You know, one sector which is doing well is cement. If you can have these intraday ups, look at Sagar Cement is up 8%, Ramco is up about 3.5%, JK is up 3%, Mangalam, Ultratech, India Cements, these are all up between 2.5%, 3%. So, you know, within a broader universe, this is one as a pocket which seems to be doing well.
I think there's a GST meet, right? That's coming up. So the hope is that that proposal of the 28% GST comes down to around 18%. In terms of pricing, that doesn't do much, but what it helps will be in terms of volumes, because the cement will become cheaper. Point number one. Point number two is there's been no price increase that we've seen so far in Q4, which is surprising and a big disappointment. But now, in fact, the hope is that there'll be a price increase that is trying to be pushed through. Whether demand is strong enough, well, time will tell. So that explains why some of these stocks are doing well.
Okay, Nestle is the other one that's really all over the place this morning. So we'll just keep an eye out on that. A couple of brokerages. Morgan Stanley has a 15,300 target price, while JP Morgan has a 21,000 target price. Sonal is here to put all of those, all of that opinion in front of us. Sonal, very diverse, the views that are coming in.
Oh, yes, they are. And the stock is lower in trade. But let me run you through what the commentary from the brokerages really is. Goldman Sachs has a neutral rating with a target price of 19,900 rupees per share. They say Q4 of calendar year 2022 was in line with estimates. Volume growth, however, sharply moderated due to large price hikes that was taken in low unit packs, and on the back of it, they've marginally lowered their 23-24 calendar year estimates by 0.2 and 1.1%. Morgan Stanley has an underweight rating. They say Q4 was below expectations, but top line was ahead on top line, but it was ahead on margins. They remain underweight due to the margin pressure, likely mixed deterioration and relative valuations as well. Jefferies has a whole rating where they say volume growth was lower and it was at a record low as well. Management attributed part of this volume slowdown to its price hike in the Maggi segment. Maggi price hike also resulted in share loss as competition stuck to its existing price levels. JP Morgan, however, has an overweight rating with a target price of 21,200 rupees per share. They say cost focus should support margin going forward, even as cost of goods sold inflation remains partly firm. So yes, diverse views coming in today, but the stock is lower in trade.
All right, Sonal, thanks very much for that. You know, we'll take a quick break. With news that the Nifty is exactly in the middle of the day's range so far, 50 points off the low, 50 points off the highs as well. We'll take a break. On the other side, our special segment, Indianomics. Lata will get chatting with a host of guests as Finance Minister in her Budget 2023 speech proposed a national financial information registry with the aim of furthering financial inclusion. So we discuss that in some length on the other side.
जब आप आगे चलते हैं तो बहुत कुछ